Good morning, YouTube. I am Grady Powers. I am Grady on the charts. When welcome and welcome. Good morning, YouTube. I am Grady Powers. I am Grady on the charts. When welcome and okay. All right. I just said here check audio again. I don't know why I do that every morning. I don't really have to. If anybody has a better process for how I should do that, then I am more than willing and happy to learn new things. So this morning. We're gonna have to really hurry up and jump into this. There's a lot of stuff. There's a lot of things. There are a lot of things moving in the pre-market. Yesterday we had a flat day. It was choppy. The price really didn't break till later in the evening, and then when it did, it moved and then came right back to where it was, and then we closed out the day. So that was practically the only real movement that we had yesterday. Overall on the week. Let's hop into the news real fast. Let's hop into the news real quick. If there is any, I do not believe that there's any news. Let's see if there's any news. We had inflation rate for Great Britain. They were looking for 3.3%. They came in at 3.5. Okay. And then tomorrow we'll have existing home sales for April coming in. And that'll be at 10 a.m. tomorrow. So yeah, there's nothing on our schedule for today. One of the things that I did notice today, and I thought it was really, really cool. One thing that I did notice is that we were looking at the weekly chart this morning. Looking at the weekly chart this morning, and we noticed that we opened price this week here at 21,000 or so, 21,300 or so. And as you can see, today we just made our way below 21,310. So if you can imagine on the week that everything that happened on Monday and Tuesday was practically flat. Everything that happened on Monday and Tuesday, I mean, tongue twisters. I practice this stuff, and I warm up a little bit because my mouth just doesn't want to seem to participate. But I know I practiced. Not practiced. I looked at the no. That's not what we're talking about. That's not what we're talking about. I love it. I love doing this stuff live, and I love doing it live because of this organic nature of being on camera live and waking up early in the morning, having several cups of coffee, getting supercharged and sitting down in front of the charts to take a look. But let's focus on the markets, right? Let's focus on the markets. What do we have here? We have an interesting weekly chart. Now, I'll have a lot on my charts, but that's not a problem because if I didn't have anything on my charts, that means I would not be working. I would be doing nothing. So this is our week. Our week has been incredibly flat. Hmm. But we did go up above the high of the prior week here. And I think to me that's very interesting because if this up close candle, if you don't close above this up close candle, then that's a strong bearish signal that we could be looking for lower prices at that point. Maybe nothing as low as what we saw for Liberation Day, but possibly a retracement back into possibly this untraded two gap, or just maybe a movement down body of this candle, maybe into this imbalance here. So it's a possibility. It's a possibility. But we're all looking at a flat week. And occasionally we could have a flat week like here or here where price really doesn't go anywhere and it doesn't go anywhere till the next week, right? And I'm referring to what I am referring to is this price action, right? So in a similar fashion, price just trades sideways for an entire week, and then the next week we see price begin to migrate into other locations. Here, we saw price open and do something similar, and the entire week was encased in the body of this candle, and then the next week we gapped up around it. So this isn't really an indication of what may happen today or tomorrow or even next week. We could see this unfortunate consolidation continue, and I think that's what we don't want to see. The market's going to open in 30 seconds. Okay, so let's go ahead and just move to the daily chart. On the daily chart here, we are, this is Monday, and then we pulled back 2 consecutive days. Now, if we close below this level, that may, indicate to us that we would be a bit bearish. However, However, if we bring this chart back, I know I'll have a lot here. However, we are also looking at this imbalance that was created on the daily chart. On Monday, we dropped down and hit consequent encroachment of that daily gap. Then we popped up. We opened, we popped up and closed here. Here, we opened, we dropped down, we opened, rallied. That was Tuesday's price action. And then we dropped down to here. But the wick of this candle is resting right on the top, right on the high end of that gap that we used on the daily, that volume imbalance that we used on the daily. I'm going to drop down to the 2 hour chart. Now, I'm not paying any attention to anything that may happen in the first few seconds of the market. Now, is it wise for me not to pay any attention to it? Well, I wouldn't chase it anyway. Right. It's almost as if I've kind of sworn off this idea that I'm going to jump into the market immediately off the open and catch these amazing rallies like we had here on Monday, right? So off the open on Monday, we caught a rally and it didn't stop until the end of the day. However, um, it's just not one of those things where you could just, you may be able to anticipate it, right? It might be one of those things you can anticipate. I'm not saying that I'm going to try to do that. I'm going to wait and I'm going to take what partial uh partial piece of the move that I could take today. Um what did we take a look here at the 2 hour mark? At the 2 hour mark, one of the things that I found interesting in last night's price action is on Monday we had at one of those rare 930 gaps, right? So it's a gap, a fair value gap that it was established at 930. We traded to it right at the open. Here we see that in the overnight session, in the pre-market session at 6 a.m., we dropped right down into that level. The body closed in what I call this area was one of the areas that I was looking for yesterday in my notes, but I was a bit early. I was looking for it yesterday in my notes. I was a bit early, but then after the market closed, went to that area. We touched that area. The blue area represents an agent session, the agent session from last Tuesday. And we drop right down to the consequent encroachment of that level. We close a little bit below that, but then we put a wick in, taking out the low, trading down into the lower time frame first presented gap right at the high that level, and then we popped right back up. In the overall range, the thing that has me the most concerned about today's price action is this orange colored area, right? So what has me concerned? Well, the on Monday, I was considering whether or not we would trade into the imbalance here on the 1G. What is that? 1 gig? What are we talking about? This imbalance on the 1 hour chart, right? So I thought to myself, oh, we could trade to the imbalance on the 1 hour chart here on Monday, reject and move lower. We went past it. We took out liquidity above these relative equal highs. We ran up here. We created a new, we just blah, 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 ran out liquidity. We ran up here and created a new buy side liquidity level. And then we began to move down. On the 1 hour chart, this is a very, very nice fair value gap. Very nice 1 hour fair value gap. We're traded roughly the consequent encroachment of that level. I was concerned about the area above that. It would be possible for us to trade to that. But I believe up here we established a bit of a balanced price range, so it wasn't really necessary for us to retrade that. We put in 1 wick, 2 wicks, 3 wicks at the high of this London session. Then we rolled over in a very difficult consolidation throughout all of yesterday to the end of the day. We talked about that earlier. Drop down. We hit the high of this Asian range from last Tuesday and then immediately touched it to with precision. And we bounced up from that. The body on this Asian session, and we closed at the body. We opened and closed on the low end of this Asian session, and then we rallied higher. Retested that high, dropped down, touched it again, popped up, traded down below it, and in the pre-market today, right around London session high, we traded right to the low of that London session. We touched it once, we touched it twice, relative equal highs. Then just prior to the market open, we ran out those relative equal highs, and that brings us to where we are now. With all of that being said, my only concern is the higher time frame weekly chart. Are we still consolidating? Will we break out of this consolidation before tomorrow, or are we going to continue to kind of trade in this range? It's a decent range, so there's plenty of opportunities to get long and short. off of liquidity levels. So where are those liquidity levels, right? Internally, I am watching this level, externally, I guess it would be external range liquidity. I'm looking at the buy side and the sell side and the buy side. Right? We have buy side here, sell side here. Internally, this low would be sell side, and this high would be buy side. So either of these ranges. Overall, we're looking at 200 to over 200 points in both directions. About 100 points either direction from here. So they're not bad trades either way for the internal liquidity or for the external liquidity. We still have this imbalance above this range that hasn't been traded to. And my thought is I'm looking at these highs, and we have this high and this high. Were we to rally here, basically match those levels of highs and then sell off would not be something that's outside of things that we've already seen. Um, if we were to rally just a little bit higher, maybe to the consequent encroachment of Asian session, we have this long range of down close candles and wicks. We could trade up here, maybe to the consequent encroachment or to this level inside of this imbalance, reject and then move lower, taking out this liquidity and the liquidity below this level, not for long term, but just to trade into, more into this imbalance or maybe into the wicks of these candles. So there are a lot of opportunities to see. But I think right now it's 9:36 and the market has been really moving here. So what we'll need to do is we'll need to get down to the lower time frames. And I have many of these levels already already written up and marked out as far as uh, where we could go and where we could trade to. There we, there we go. You, you go over here, and you go over here. So I can see you, and I can just look at my little list here. Okay, so there's a lot of stuff done, and now we see that price is really starting to react at something. I'm gonna pull this level forward. We're very near the high of that Asian session from last Tuesday. We're at consequent encroachment of the area that I was considering as an inversion gap, or I would call it inversion or delayed gap. We ran it out and now we're back to it. Now we're back to consequent encroachment. Now, what if we're bullish on the day? What would we be looking for? Well, immediately off the open, we've popped up. We created this small imbalance here. I'll blow that up so we can really focus on it. Now, doo-doo-doo-doo-doo-doo. These levels, this level is the first 5 minute gap from Monday. And we traded right to the low of it, popped up, traded right down, tapped the consequent encroachment of this Asian session, and then we popped right up. Then, after the market opened, here is the first presented gap for today. One, two, buckle my shoe, FEG. Okay. So I have two conflicting theories at play at the same time. And the conflict is the idea that we would rally to the middle of this imbalance, that we would put some attention at this level, that we would either trade above, trade around, trade to, trade through. Oh, excuse me. Trade around, trade to, trade through, right? Okay. Well, Dad blurred it, and I've still hesitated to do one thing that I really know I need to do. There have been other things that have been preoccupying my time I really need to address. But the one thing that I do really truly need to address is electronic. is the what was our homework for ICT the other day? It was to oh yes, create workspaces in TradingView. Create workspaces in TradingView. So on one workspace, I could have all of my Asian session levels that I could watch on one screen. And then I could have all of my imbalances on another screen that I could watch. I could have all of my weekly opens, daily opens, and closes on another screen. And as we come into those levels, then I could incorporate them and clearly know that if I'm looking at this screen is only the imbalances that we've entered. This screen is only the opening and closing prices of the daily sessions and the midnight opening and all of those different things. To really organize, to really organize everything that I would be considering and tracking. And yes, that's still on my to-do list to get done. Now, we opened up this level and we slowly popped up. We traded down 2 taps directly at consequent encroachment. And if your alarm system didn't go off and scream, jump in right now, then you haven't seen how powerful the first presentation fair value gap can be, especially after a long-term consolidation. After prices have been consolidated for a long period of time, yes, it could be that, that explosive, right? It could be that explosive. It could be a thing that would make price, you know, we'll try this. It could be the thing that would make the price just really just, take off and like a rocket and just, go. But it is only 9:41 a.m. 48 seconds. So I'm not eager to participate. I'm not eager to participate. I'm still waiting for something to occur. But while that happens, let's continue to organize what we have on the screen while that's happening. And I'll just call this a 1H. 1H. Uh, do, 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 do. This will explain everything. Sell side imbalance, buy side inefficiency. hmm London high, pre-market high. This level was a 15-minute imbalance that I was tracking from here. I believe from here, and I believe it's on the 15-minute chart. So I really am paying attention to certain things that I would not normally expect to see in price action, meaning gaps and areas of interest and points of interest that happened days ago coming back into play as the destination for price. Is price literally targeting those areas, trading to those areas, and having an interaction and intersection with those levels. I'm going to pull the current Asian session forward just a little bit. That's the low of today's Asian session. We just really popped up into an imbalance, into a small gap between the low of that day of this Asian session, the current one, and the one from last Tuesday. And in these areas, I like to see how price operates. Yeah, we'll move up, we'll drop back in, we'll touch these levels. These two levels are exact same level. And the confluence of these levels, where they all seem to meet at, well, I in my back study, I see that we are having price react at these levels more often than in other areas. If I'm not bullish, then I probably am way on the wrong side of the market. 'Cause I mean, because it's a strong element of bullish price action. That's why I made a note of that, made a note that we just tapped this level in the pre-market, rallied, traded right back in, hit the breaker, and then we moved higher. But I am not predisposed. I'm not married to the idea of um what is the word? I'm not married to the idea of being bullish in this area. Not immediately off the open. Immediately off the open, if we were to manipulate lower, right? We manipulate it lower, creating the idea of bearishness for the movement higher. That's probably more accurate than what I'm thinking now. Because what I'm thinking now is that the manipulation to the upside would be planting the idea of the reversal at this level. We're still tapping the low of the Asian session. This is this morning's pre-market session low. Do I think we should run because we went above the London session. This is our second attempt above London session. We ran out after the London session. We went below London, then immediately went above its high, then immediately dropped down and took its low out again, and now we're back above London's high, and we're approaching the Asian session low. Now that we're at the Asian session low. 9:46 a.m. Zip bop boop ba la pop. Close here, open here. The gap between yesterday's close and today's opening price. It begins at 21,401.25. That's the gap high. And the low is 21,278.25. It may not be a part of the whole move. But I would like to see whether or not we close this gap. And if we do close this gap, will we continue from the closure of the gap? Hmm. Oh. And that level is in very close proximity to the consequent encroachment of the Asian session, the higher the gap. So, like this area is in alignment with the closure of the prior day, and it's also the consequent encroachment. And this white line represents an unmarked level. Or did I do it properly? The daily open. Which day? Which day, buddy? Huh, buddy? Which day? Huh? A day from 15 weeks ago or yesterday? Mm-mm-mm. That's today's daily open. This is where we opened at price $2. Okay. So now the week is bullish. As we move back above the weekly open, everything below this level is in the wick of the current week. Today is Wednesday, so basically like the middle of the week. Um, Now we've added, just this much body to the week. Now we're moving up to the high of today, which would make today a bullish day once we get above that level. However, we will still have to contend with today's opening price just a little bit. See what we got going on here. Very strong move up. I hope there are people Well, naturally, I have a low, I have a little bit of a latency on my trade, so it's not possible to fade me. But hope this is beneficial to somebody else. Drop down, hit the order block, up down. Very clean, very clean. It's just 950 though, right? And as a silver bullet trader, if I say, look, I'm just going to stick to the silver bullet, right? That means what? That means that I'm going to miss these trades. It doesn't matter how clean and easy and simple that it looks. If I decide not to trade till 10 a.m., if I decide to allow the first 30 minutes to transpire, then if 10 or 15 of the first 30 candles or 31-minute candles are, 20 points apiece, and we move 1,000 points before 10 o'clock, it's, that's what happened, right? That's just the way the cookie crumbles on that day. And yeah, yep. Yep. And I think that it's really going to be a very different idea and a very different understanding when the conversion of these concepts into profitability occurs. On the hourly chart and on the 15-minute chart, on the hourly chart, there are two candles. There are three down close candles, and the wicks of two of those candles are crossing each other like this. And I think that that's really crazy, right? I'll show it to you. This is where my eye just ran to. Grady, there's crap all over your charts. Yeah, I'll show you. I'll show you where. This area right here. This looked like what, an immediate rebalance? This looks like a wicks as gaps scenario. We just traded to the low of this up close candle. It's 952. I'm vamping as we run through the macro. Mm-mm-mm. Sorry, we come down time frame 15. 7 minutes left in this 15-minute candle. It is 952. It's 095254. Looking at this imbalance here. Take that level, pull that level forward. That's very interesting. Formed at 2 o'clock yesterday. We tapped that level's consequent encroachment there on the lower time frame. I'm going to take this level, which is exactly the same level. Oh no, that is my level. We'll move the Asian session from the prior day back. Return this Asian session level to midnight. Because we hit the consequent encroachment of that level, I am curious now, extremely curious to see how we play out from this point forward. Because that's a very strong rejection of that level, right? Am I right? On the 15-minute chart, that's a very strong rejection. Oh, interesting. Tap that level's consequent encroachment, immediately move back, put a wick inside of this imbalance that we were watching. At 9:54 a.m. What are you thinking, Grady? Buddy, I'm thinking this is the rally, right? This was the manipulation to the upside. We've been thinking that, right? We were kind of preparing ourselves for that. Whew. So what are we waiting on here? We're waiting on clear evidence of a market structure shift. Look at this craziness. Look at this craziness. Consequent encroachment to the high, touch the high of this level, drop down, back to the high of this level. I feel foolish not to put in a short right now. I feel foolish not to just like, oh yeah, I'm just jumping on this right here. I'm running the risk. But let's see whether or not my hesitance pulls me out of the fire this time. He hesitates, and let's see if that saves him. I'm actually looking for a market structure shift. It's 9:55 and the macro is coming to an end. We're in a gap created as yesterday's 2 o'clock silver bullet. Nah, is that true? Is that true? Is that true? Are we in the gap of yesterday's 2 o'clock silver bullet? Right? The gap created on the 15-minute chart at 2 o'clock. Here. Bop, bop, bop. I'm loving it. We've returned to this area as an area of sensitivity multiple times throughout the consolidation. It's just been one of those spots where we just keep coming back to it, repricing it. We'll trade to the high of it, trade to the low of it, close on the low of it. We've done all of these sorts of things at this particular price level. When I marked it out, I identified it as an area of interest, but I had no idea what to call it. And don't get me wrong, if I can't remember all of the names of every ICT strategy, like a list of 82, if whatever he's released so far, 70 something entries or whatever it is, I'm sorry. I'm sorry. If you'd asked me that 20 years ago, I probably would have had a detailed list and had specifics, and I would have been very. But as time has kind of creeped on me, I'm telling you, I have to deal with what I can deal with. I have to deal with what I can deal with. Everyone's like, you're lazy. You're being lazy. Look. Let's not be accurate. Let's not be accurate, right? Let's just be, come on now. However, I really don't, honestly. And when I marked it out, I realized that it was a significant zone, but I had no idea how significant. And it's a pre-market level that was created at the close of the London session on Monday, I believe. At the beginning of the London session at the end of, yeah, on Monday. At the close of the London session on Monday. Now, the element that I'm looking for here at 9:57 is not the first presentation presented fair value gap, but a break in market structure with just a regular SIBI that would serve as a bearish fair value gap. And I am willing to take a short on that level, even if it's run and repriced to later. Does that make sense? Okay, so price is kind of moving down. Now we're only on the 1 minute time frame. We're only on the 1 minute time frame as we're watching price here. And that could help us or it could set us up for failure. So we're going to just keep watching diligently. This is the 5 minute time frame. Price is 1 minute and 30 seconds to see if we close above the high of the prior up close candle. The clock and the price have my attention right now. We are above a long run up, but it would just be ideal on this 15-minute chart that these two up close 15-minute candles could serve as just a beautiful bearish order block if we were to move to the downside. Now, how could we be setting ourselves up for a move to the upside? How could I be missing that? Because I'm looking at two up close candles here on the 15-minute chart that could also serve as this beautiful bullish fair value gap, right? This is what we're seeing on the lower time frame. Did we see any sort of a price retrade that should have taken on a one while I was over here yapping? I don't think so. I don't think so. Up and down and up and over, up and down and up and down and 12 seconds, 10 seconds left of the 5 minute chart. So we have two down close 5 minute candles. That's strong. Very strong. Hmm. Well, that was expected. That was expected. Shoobity doop, shoobity doop, shoobity doop, shoobity wah, computer love. Shoobity doop, shoobity wop, shoobity dubby. What is happening here? So the imbalance that I was looking for, I didn't see. But I really do think that we just traded into the 2 o'clock fair value gap, if a silver bullet from the other day hit the consequent encroachment of it and then just started fading out of it. And I'm sitting here staring at it like, oh, what should I do now? Hmm. Took an opportunity to get involved here. Immediately runs me out. Hmm. In my head, I did yell out, what the heck was I waiting all that time for? Right? Because it drops down to the very low, that level. And it does look like it's about to slide. And then it does this. Hmm. And then it does this. Is there news? Did I see the news? Was there some news that I just missed? Right? Did I just miss some news or something? No, because we checked the calendar before we got started. It's just some odd 10 a.m. fluctuation here at the close of the hour. Yep. Yep. Perudo. Mm-hmm. Mm-hmm. The white level is today's opening price. Mm-mm. Mm-mm. Shoo doo 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 doo. 10 a.m. 10 a.m. Yeah, yeah. Yeah, yeah. Shooby do be do be do be. A shooby do be do be do be. We should ran some liquidity out of above this level, and then we drop right back down below the consequent encroachment of this zone. We drop back into this little zone area here that I was watching, this sort of little green pop spot here. Just watching where the bodies are closing. You see how this body just closed below that level? There was a flurry of price action, but then it just all came back in. On the prior 15-minute chart, saw that same price action here. It just flurried, popped up, dropped right back in, giving me the thought process that I could get short at the close of that candle, and I did, and I was offside. Then my expectation from that point would be that if price were to rally, that it would do so with this energy that this candle had, and just really go ahead and get away from this position, but it didn't. It to return right back into this position for some quiet price action. Still operating below consequent encroachment of this level. However, on the 1 minute chart, the bodies of the candles are closing higher in this range. All right, we're still operating below the consequent encroachment as far as the way the price is um, fluctuating, but we're still, but and still below this level, but we're higher, right? We're not down here. in the discount low of this range. We're in discount high, just right below the premium. So, yep. So I'm watching that, man. You know what I'm saying? I'm just looking at that, just trying to see what's going down. Ten a.m. On Monday, we came into an imbalance at we came to one of these sort of a speed bump consolidations at 10 a.m. on Monday. And what I saw there was that on Monday we created a tradable price level on Monday. That was like fair value gap. It was a very clean, clear fair value gap. It looked just similar. It looked similar to this on Monday, and we came right into that area on at 10 a.m., which was going to be our silver bullet. This silver bullet is this 10 a.m. price action is it's it's if you turn your head 180 degrees. This silver bullet price action is high liquidity resistance. I mean high resistance liquidity, right? It's high resistance. Every time we move above consequent encroachment, we fall back. Mm, okay. We've fallen back just a little bit more. Da da ba bow, zabati ba ba bo wa bow, yibbity bang bang, ba ba bow, wa ba 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 wa ba 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 wa ba bow. Stop below, stop below, stop below. TP. Man, wouldn't it be great if it came back right down to this first presented fair value gap from this area? Use this and utilized it for some crazy price action? That would be grandiose. Yow. Yabow, bladow, rabadow. Ba 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 ba. Hmm. No, I think I'm dialed in too close to see what's actually happening. I think I'm dialed in too close to see what's going on. Oh, we are at the high of that. We're at the high of the gap closure. So we had the gap closure at 21,401. My entry that I had, this tentative entry that we have is 21,403. So that's a 100% gap closure. Mm, 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 mm. 55 seconds left in the 55 seconds left in the 5 minute candle. Once we reached the gap closure, we had some resistance, sort of a speed bump here. But it seems like we're going to have a continuation. We have not had many gap reversals in the last 2 weeks. If we trade a gap in the last 2 weeks and we get into the gap, we address it at all, right? So for the most part, many of the gaps we haven't even addressed until much later. We'll just create them and keep going. Then we'll return to them later. And then for many of the current gaps, we have traded if we trade into them, then we'll trade all the way to 50%, hesitate, and then continue. Or we'll trade 100%, hesitate, and then continue. But we haven't had like, that normal trade the New Day opening gap. Not recently, no. None of them have worked. Boom, 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 boom. I have not taken this trade. It's right here at this area where the gap is closed. We have turned over right at 21,401. That's outside the high of the current daily gap. And then we dropped right back in. Interesting. It's very interesting to me. It's very interesting to me. And again, this level, and I don't know what to call it. This is what I mean. Is like look at this right at 21,395. You could take this level and then you'll go back all the way to like last week. Inside this consolidation, we've returned to this area multiple times. And every time we get here, we price it just like this. And now in different situations, we'll go in different directions. But in this particular case, we priced to it. We closed on the high of it, wick to the low of it. Okay, come on the 5 minute chart, I'm watching the two previous down close candles to see if we decide to close below that level. I had imagined that we would pull away from it at this point. We dropped down into the body of the down close candles here after we made two up close candles at the high of this gap closure. Remember, the gap closure is 401.25. 401.25 is 401.25 is right there. That's the high of the gap. Do you think we'll retest it before we go downgrading? What do you think? What do you think? What do you think I think? What do you think I think you should think? What do you think that I think you think? Right? All these are very deep questions, but many of them don't make any sense. Where is the market structure shift change in character? Does anybody see it? Does anybody see that? Market structure change in character. On the ES, it's a little bit different because we have already, no, we've just traded down to the lowest up close candle before that move up on the ES. We tapped the body of that candle, then we popped up just a little bit. But as far as a closing price, nope, we closed above the opening on that candle. Oh, oh, excuse me. Yeah, seems odd, but I can't seem to get this Knight Rider theme out of my mind. And I think one of the things about the Knight Rider series that has me so enthralled nowadays, so just has really captivated my mind, is um when we were kids, we were watching this show about this guy who had a car that was that had a AI uh operating system that ran it. And it's like, oh yeah, that's crazy. And I know I was a kid watching Knight Rider. And I know a lot of people who drive cars today that has an AI system that operates it. They're literally like Knight Rider. And I made a joke one time. These people like Knight Rider, but they don't solve crimes. Right? He took his AI vehicle and he was going around like, "Hey kid, let's go, let's go, blah, 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 blah. Nobody's like, hey, hey, chat, like, hey, chat, let's go solve some geopolitical turmoil or something weird like that. You see where we are now? You see where we are now, Grady? Yeah, FOMO. I'm about to FOMO into this trade just a little bit here, guys. Uh, we just traded to the low of that up close candle, rejected it. Now I'm watching the ES because I want the ES to really give me the goods here. I don't want any kind of weirdness to happen at this point. Bring the stop loss all the way down to the high of this up close, the high of this down close candle. It's not where you stop loss. Your stop loss should be there, guy. Yeah, I know. But if, at this point, if we ran this level, then I really do believe that we're going to go up at that point, right? So why would I put my stop loss way up there, put myself in that much risk for what, right? For what? What am I risking all that for? I'm having deja vu in this trade right now. I'm having deja vu. That's crazy. I swear I've taken this trade before. What happened then? Oh, look at the chart. Look at the chart, dude. And what's really getting me is the overlapping wicks. Overlapping wicks are really obscuring to me whether or not this is a gap. So that's the thing issue that I have. That I see this long wick and I see how the body of this candle is there's no passage through right here. So blah, 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 blah. We have this long wick that drops down, then this, and then this. Then we move up, trade right back in, close here. And this wick is telling me, no, that's not a gap. But I'm thinking, yeah, that could possibly be a gap. This is truly a SIBI, right? That's truly a SIBI, because there's a space between the low of this candle and the high of this candle, and we priced into that level multiple times. The time of day and the reluctance for price to go up right here is is convincing me, right? Primary, the initial uh front, the prefix of that word is con, right? It's convincing me that we're going somewhere. You heard that here first. That price is going to either go up or it's going to go down. And I don't share that with everybody. And it's just interesting that we could uniquely have this sort of consolidation in New York every day. That's crazy to me. How can we have consolidation in New York every day? This is the only thing I can do for me. Even if it runs me out, it just does. That's it. That's just it for me. Um, and the reason I'm saying that is because it traded to the levels that I was looking for it to trade to. The market opened and it rallied to this area as I would have expected it to rally to this area at 10 a.m. to then price higher, higher and higher, and then price lower. So it's following the script that I would have expected it to follow. And if I don't, and I hate to use this term blindly, but if I don't just blindly trade the trades that I'm looking for, then I won't develop the consistency that I think that I would like to develop. Even if I'm stopped out, and I might be consistently stopped out, and that's not good. But I know that if I'm looking for a trade and I'm looking for levels and they go there, what would be the point of me marking out these levels, right? What would be the point of me even marking out these levels if I don't take the trade at that level? Now, I will have to learn the difference between one and the other ultimately. That's true. I would just have to learn the difference between this and that, and then it'll be what it'll be. But yeah, ultimately that's all that we could do. We closed the gap. We hesitated at the gap. There was a speed bump at the gap. Um, there was high resistance liquidity. There was this that could just possibly be like manipulation to the downside with the reversal. But then we put several wicks above this level. inside of this city. Um, Now we've opened at the inside the city, apparently. That doesn't look good. That does not look good. Why? Because instead of us, right, putting down here and then putting wicks into the city and closing, we opened inside the city and then we moved up. It's two. It's two on the day. Traded to that high, 1020, 33 seconds left. Took out the liquidity above that level. Then we dropped right back in. Hmm. Now, was my logic bad? Of course it was bad, right? Because what I was looking for was this. Strangely enough, what I was looking for was this as the market structure shift. Hold on a second. What are we doing? Stop that. 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 I was looking for this as the market structure shift, right? Shift to the downside here. After the shift to the downside, movement up, then breakdown, then movement back in and down. Where at this imbalance that we created the other day, that we came to, and then what do we begin to do? Up, 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 down, right? That's a swing high, right? Goldfish. Even this, I kind of visualize this as also the swing high, right? So we had this high, that low, and that low. This high, this low, and this low. This high, this low, and that low. Swing high, right? Oh boy. So, what would be the alternative move in this position? What is this going on? Well, to me, the alternative move in this position would be that we created this small imbalance here. We ran up above it, drop down into it, and then what happens? We trade away. I don't know. Am I excited about what just happened here? No, I'm not. No, I'm not. No, I am not. No, I am not. No, I am not. Because the thing that I don't like is that all of this, let's see, all of this price action seems fairly straightforward, right? The market opens, and the market opens, pops up. All the pre-market price action is, trade to a gap, drop down, trade to the gap, drop down, trade to the gap, drop down, trade up, and then as soon as New York opens, it's wicks and bodies back and forth, like wicks and bodies. We rally off the open, and then when it comes to the opportunity for me to get involved, it's wicks and bodies, overlapping wicks and overlapping bodies, and stop loss run, and highs and lows taken, and prior lows taken. And it's just one of those things where I'm just saying we drop down in here below this gap again. My stop loss above this high. It's a lot of that's a lot of range, buddy. I saw a clip on Instagram the other day, and an actress told her her co-actors in the TV show series or whatever that they were working on, that when they were called up onto the stage to receive an award, that when they went up there, that they would all act like they were contestants in a beauty pageant, right? So, contestants in the beauty pageants are always, doing that thing where they're fanning their eyes and fanning their makeup to stop themselves from sweating and doing all this sort of stuff like this, right? So they're up there on the stage and they're doing this, right? And they're like, oh, okay, okay, cool," fingers crossed and all sort of stuff. And I was just laughing because we talk about trading psychology and we talk about how the psychology of trading traders operates, and I was just laughing for a split for just a moment there because it was just a visual representation of uh how I felt when I put this trade on. Is as soon as I put the trade on, I said before when I started developing, and I was like, yeah, we may just run above it, stop me out here, drop down below it, trade back into this area, and then drop down a little bit, right? And so as soon as I took that trade, that's exactly that's exactly how I felt. I felt like a contestant in the beauty pageant, like, "Oh, come on, like, oh, come on, like, um, yeah. So I mean, that was just me sharing just uh, that internal sort of a funny part about it. Now, what I also don't that I think is also funny is how that we drop down below this level after we hit that gap, then we drop down below it, and then we trade it back up into this area. And I don't think that's funny. Why? Because of the consolidation framework that we've been trading through in the last few days. The idea that, yeah, I took this trade and it delivered to here. Oh, did you take that low out? No, I didn't take that low. I just dropped right down in here aggressively. Oh, to do what? Go lower? No. Immediately turn around and take Grady out. Oh, oh. So how does that affect your trading psychology? How does that affect your trading psychology? What it is there's a cycle of entering trades, holding trades, having stop losses in positions, having those positions taken, and then being as you go through the process of it, being exhausted throughout the day because you have to encourage yourself to not be overwhelmed by the outcome of the trade. And if this trade falls off the screen, right? If this trade falls off the screen, not to allow that be a personal representation of the universe's opinion of you. So, entering this trade again at the point where I was stopped out for the second time in this exact same spot is against every trading rule that has ever been said. Don't chase, and don't overtrade. If this trade falls off the screen, right? If this trade falls off the screen here, then there's a different level of psychology that we have to deal with, right? And I put a video out the other day, and it was this disjointed, repeating, convoluted uh, um, message about trading psychology and gambling and all this sort of stuff. But this is the reality of it, right? This is the reality of it. There are rules in place to protect us from overtrading and from FOMO and from getting in tilt and all of that sort of stuff. But putting it into action in real time is different than repeating a video that we saw somebody else who's profitable do, right? If I told people, oh yeah, no, it's no, there are these people who make millions of dollars in trading, and this is exactly how their videos look and sound, and I'm gonna make mine exactly like that. That's not the trading experience of the new trader, right? The trading experience of the new trader is looking at a trade like this, being stopped out here, right? I think I was stopped out somewhere else in here. I think I was stopped out somewhere else in here. I want to make sure that because I know it's three trades. Let's see. I got short here. I got short here because of this imbalance. I got short here, right? Which I think, no, where's the sell? Where did I sell it at? It's buy, 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 sell. I can't see my sell because I'm hovering over this. Oh, okay. So I sold somewhere in here and I bought it back here at this imbalance. Right. I bought it back here and I'm selling somewhere down here. As price begins to break lower, taking this low, closing below this, closing below this, and closing below here, right? So I'm taking the short here and then I'm stopped out. And everybody's like, yeah, but we're bullish. Yeah, sure. Okay, great, 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 great. That's great. We're running for buyer side liquidity. Oh, well, okay, thank you. Thank you. Thank you. Well, thank you. Well, in that case, before I start trading every morning before I start trading, go ahead and put the bias of the day, the direction of the day, and my entry and stop loss in the chat before I trade every morning. And for the trolls who start doing that, stop it. Yeah. So then here, as we moved into this area, and then we put a wick here, close below the gap, wick here, body closes here, wick here, body closes here, right? Now I'm saying, oh, okay. Wick here, body closes down here, and then we run it. As soon as, so this is a low down close candle. Boom. This next candle opens here, closes here, which was obviously just like this candle, opens here and then pushes through. Right. We're greedy on the lower time frame. Yes, I get that. I said that. I see that. I'm going on a lower time frame. There are a lot of buying and selling signals. Yeah, but still at the same time, this is what I have to contend with visually, right? The highs are rising, but they're not taking out these other highs. So this rising above this level, dropping down below that. It's 1032, and now we're back below consequent encroachment of this imbalance. Mm. And so these are the psychological struggles that we're dealing with more so than anything else. And I find that most of my entries, and then you can go back through all of my live streams, most of my entries, I think that I'm going to set them up in a market like this, right? I think that this is what the market is going to look like, right? Okay, a high, a low. Okay, yeah, we ran that level out. Okay, great, right? We ran up. Oh, we hit that level. Oh, we sold off. No, that's what you get in the London and pre-market. In New York, we get this. A drop down below that gap again, a retrade to that level, and I tell myself, don't overtrade. I tell myself, don't overtrade. I tell myself, don't become tilted. I tell myself all of the rules that we follow as traders. Tell myself, be patient and all of these sorts of things. But when it comes down to it, this is the reality. The reality is boom, boom, boom. Please don't drop down below this level and fall off to my screen. He says to the screen with tears in his eyes. Please don't do that. You and I are friends. Please don't fall off the screen. Please don't stop me out multiple times. And because I decided not to overtrade, I'm not putting on an additional two and three trades trying to get into this. Please don't fall off my screen. Please, please don't fall off my screen. Now remember this imbalance is here. Take that, pull that forward. This is where we are. Mm, 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 mm. Consolidation day two. Day three of consolidation. Consolidation, New York. Reporting live from Grady's trading office. Yes, yes, in the office, Tom. Yes. Yeah, we're still consolidating.
Yes, consolidations are still everywhere. I believe it's raining tornado sharks now. We're still consolidating.
Oh my God. I haven't even checked my I haven't even checked my what do you call this? I haven't checked my P&L. I haven't even checked my P&L. My stop losses were reasonable, you know. My entries I thought were reasonable, but the outcomes are unacceptable. These outcomes are unacceptable. There we go. I just want to see. I don't really care what direction we're doing now. I just want to see this consolidation parade stop. Please stop the consolidation parade. Please stop the consolidation parade. And I know it's a short-term consolidation. There wasn't really much time. It's not like yesterday. Yesterday was the entire morning session. At least today we had like a rally move to the upside off the open. That was decent. That was decent. And we've traded for an hour and 14 minutes, and we took three trades in this area. But yeah, that's now we traded to the high of this level. We're at consequent encroachment. We're pulling back from it. Mm. Yep, yep, yep. And then again, I tell you, whatever this area is calling price. It is calling it. This level is today's opening price. Did I get short at today's opening price or below it? I got short just below today's opening price, right? Here, here, and here. All of these levels are below today's opening price. Getting short just as we came into close proximity to today's opening price. Strange enough, seems like a much better trade. The only thing that we did is we put this long wick up above it aggressively, given that very strong bullish sentiment, right? A flash to the upside. That could be considered manipulation. This move to the upside just took out the high here. Then we established this high. None of these up close candles ever closed above that high. And so my bearish eye is showing me all of that on the 1 minute. On the 5 minute, oh no, it's just wicks and down close candles, buddy. Wicks and down close candles. Wicks and down close candles on 5. We haven't been able to close below these down close candles. And on the 15-minute chart, we're just sitting above this buy side imbalance, sell side inefficiency, and we're just hovering up above this level. Now, will we ever return to that zone? Probably not. Is this a breaker? I don't think so, right? Because a breaker is let's see, this is a low, this is a high, but this is a high and low. And a breaker, I would assume, would be the opposite, right? It would be a low, high, lower low. I think that would be a breaker. So that's not a breaker. So I wouldn't imagine that we would drop down to this high and then trade away. I don't think so. I don't think that would be the case. I don't think so. Man, there have been so many times I've tried to trade through consolidations and I just wrecked myself. And to believe that I'm still attempting to combat that urge now. Now that would be considered a breaker on the 15-second chart, wouldn't it? Where you have a low, lower low, and a high. We move up above it, then we trade right back down like bam, right? You wouldn't imagine on any other time frame that price would violate this high with this lower low, right? This low, high, lower low. On any other time frame, you wouldn't imagine that would be violated. You would think that would be solid. Like price would never go back below that level. That's what you would think. Yeah, I know, right? That's what you would think. That's a 15-second chart. But I'm hands off, and I don't even know why I'm still watching the market. And I think I'm still watching the market because I wanted to be vindicated to see that the market was actually going to end up going in my direction. But I'm also very okay and accepting of the market being bullish, and the idea that I got committed to particular trading strategy and trading plan that was wrong. It didn't play out, but I just go to the sidelines because it didn't play out doesn't mean that, you know, it doesn't mean that I shouldn't make a trading plan, right? It just means that I should make the right trading plan. Genius. Yeah. Uh. Ba 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 bow. Hey, is the ES collapsing? Is the ES just constantly moving to the downside and the Nasdaq moving up? Yes. The ES looks like it's moved to the downside, especially on the 1 minute chart, much more than the Nasdaq. And I'll do what? I hit the space bar right here, and we'll take a look at not the micro. We'll take a look at the ES, and then we'll go to the 1 minute chart on the ES, and then we'll just compare these 2 days together. Compare these two, the price action, the way we've moved at the same time. Here's the imbalance off the opening price. Nasdaq is much more of a vertical move with a more of a flag at the top of it. Um, and we dropped down. We just rose to the low of this imbalance on the ES. I'm not trading the ES. I'm just using it as a um, you know, just a comparison. Oh, would you call this an SMT divergence? Oh, would you call this an SMT divergence? On the ES, I would say the market was going to go down. If you would have said, "Hey, dollars to donuts, buddy, what do you think?" On the ES, I would say, "Yeah, no, buddy. Look, man, we dropped, but we had a solid push up. We traded back into it. We moved up. We hit that order block. We bumped, right? We got down below all of this stuff. We traded back up. We've had resistance in these levels. Yeah, we came back up and we retested the low of this SIBI, right? This bearish fair value gap. We touched that level. That gap was formed at 10:10 a.m. What do you think we're gonna do, dude? Well, the market itself says, I don't think that's going to happen. The market itself said, look, we're going to sit here and we're going to engineer liquidity for as long as we need to. There's going to be plenty of people putting their shorts in here. And if they keep putting shorts in, we're going to keep hitting them with a stop loss. We're going to keep hitting their stop loss. They add another short, we're going to hit another stop loss. Because they're probably over here looking at the ES thinking, man, this thing right here is very heavy. It's curled over right above this imbalance here, right off the open. Do you see what I see? Do you see what I see? T. Mm. Because they got long and they got stopped out. And they got long right there and they got stopped out too. Mm, 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 mm. 5 minute chart, we're at the low of that 5 minute candle. We're at that 5 minute candle on the 5 minute chart. We returned to the body of that candle, tapped it, and bounced. I'm looking here. I'm looking right here. We just dropped right into the body of that 5 minute candle right before the close of the candle. 25 seconds left in this 5 minute candle. We failed to take the high. Failed to close above the high with an up close candle on the 5 minute chart. But we did run up there and source some liquidity. There are 10 seconds left in this 5 minute candle. This last 10 seconds are going to tell us what type of candle this is. Anything could happen. Mm, close right at that level, and we open. Look where we open. Now I got short here. I got short here. hmm And we were back and forth, back and forth, back and forth, back and forth. Hindsight. Hindsight says I should have traded the pre-market. It was much cleaner, much simpler, less of the back and forth, less of the wickiness. It was crazy. On the ES, we hit the low of that 10 a.m. imbalance, that SIBI that was set at 10:10. We hit the low of it and then we dropped. Wow, right away from it. Ran right up to it. One wick touched on it and then we dropped right out of it. So what are you trying to say, Grady? You trying to say this was a very important such and such and that we should such and do it and do a thing and another thing? Nope, I'm not saying anything. I'm watching price and I am forward testing this mentality and strategy that I have right now because I could just jump up and walk off and walk away from the chart and not even look at it, right? Just take these bumps on my head and then go, take my basketball and go home. Or I could properly formulate a visual strategy to attune my eye to the tempo of the market right now. Now, all of the upward and downward movement on the Nasdaq is going to be like the ES, but far more exaggerated. Which I think at first, when the first time I started trading the Nasdaq, I didn't like it because of that. Because on the ES, normally if price is going to change, it's going to change exactly on 50%. It's going to change exactly on the open or close, or it's going to touch exactly the low of a candle. So those types of things I used to really, really enjoy. The Nasdaq isn't really like that. Its targets have few more ticks. There are a few more ticks. It is precise to a particular level that it's going to run to, but it's almost like a decaying orbit, if you would imagine that, right? The next time it comes around, it'll probably be lower than the last time that it came around. I'm looking at the ES, and it looks like the ES is about to slip off into oblivion. But I'm not going to trade that. I'm not going to trade that. I like the way the Nasdaq looks because the Nasdaq just popped up into an area that had two overlapping wicks, and there's nothing there but a body. Even the low of this candle, even the low of this candle has space in it, and that just it looks like yeah, that's you say to yourself, yeah, that looks like exactly what I would like to see. I would like to see us hit the low of the fair value gap at 10:10 a.m., immediately rush away, breakaway gap, trade up into the wick of the prior up close candle, then drop in, right? The rally on this candle, if we rally anywhere up here, the rally on the NASDAQ is going to be violent, right? It's going to be violent. So I'm not looking to enter prior to that. Have I talked myself into this entry that I've been stalking all day long? I think I have. What if I lose again? What if I make $3.852 billion on this one trade? That's not true. Not possible. Not possible. What that would mean is that when we got to zero, I think that the candle will continue to go, and that doesn't even make sense. Oh. Well, I don't know. I might make $1 billion. That might be roughly $1 billion. If you took a short from 20,400 on a Nasdaq contract and you let it fall to zero, that might be about $1 billion. What do you think? What's the calculation? Has anybody ever done that calculation? I'm sure all you would have to do is set up like a monthly chart or something, an annual chart or a monthly chart, and then um, put on a little short ticker, drop it to the side, and just slide it all the way to the bottom. That makes sense, right? Why are we thinking? Why are we thinking about that? We're thinking about that because that's new trader thought process, right? That's new trader thought process. New trader thought process isn't often illogical. So we have rules in place, slow us down from that type of stuff. So this is what I meant by violent, right? So if we were to imagine that, and we did imagine that price on the ES would before it went down, would trade into the gap formed between the close of this price and the opening of this price, that this is what I called violent, right? That it wouldn't be a very slight movement above the high of this up close candle, that it would actually be much more of what we would consider to be a manipulation. There would be a very powerful swing to the upside, taking out old highs and old levels, because this is like a razor sharp high, right? Relatively equal. It would rally up, taking out the relative equal highs, moving up into this wick much more aggressively. I wanted to see more. I really wanted to see more. I didn't want to see the maintenance of the relative equal high. It leaves us in jeopardy of being run out in just a few more moments, right? We would take our short here, and then in a few slight moments we'd be run out. Mm. Mm, 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 mm. Low grade stress pool. We're just watching the ES sit in this imbalance very neatly. 33 seconds left in that 1 minute candle on the ES. We're watching the ES right here. Nice movement to the upside. Now we're taking out the relative equal highs on the NASDAQ. How many people were watching this level again? How many people watched this level to see what price did here when we traded to this little small gap at 958? I'm looking at a gap that we created at 1010 on the ES here. 1010. What did we do at 958 on the ES? 958 on the ES. Well, that was also a SIBI, and we traded to it here. Another one of these reasons why I haven't put on any type of an order. Boom. Another reason I haven't put on any orders here. All of the gaps that I see here at 9:58, just prior to 10 a.m., here at 10:10, just after 10 a.m., I'm like saying, look at that. And you're saying, yeah, well, look, market structure broke lower here. What are you going to do about that, Grady? What are you going to do? Grady, 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 Grady. There's only one thing to do right now. Hmm. Do 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 be shooby doo doo be shooby dooby dooby ba 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 da bow. Hey. Okay. Hmm. Hmm. I was taking a look at the continue this apparent continuation. Apparently, it might be a continuation from the initial move of the day. And I was just taking a look at it, and it gives so many um Yeah, I know. I was talking to myself there for just a second. Yeah, I know I was talking to myself there for just a second. And I was just making a note that on the ES just drops down into this first imbalance and just takes the low of this level. And then literally from the low of this stack, as we've been just breaking down, it just from the low of the stack, it just says, oh yeah, this is exactly what I was trying to get to. I'll blow all of this and then bam. Up. Not on the NASDAQ. On the NASDAQ, it was just this very sort of sideways price action, trading into this seemingly trading off the order block, trading off these down closed candles in this seemingly insignificant Sibby. I mean, yeah, Sibby turned Bissy, right? And that's crazy. But yeah. And then remember we talked about this one up close candle that I said to myself, that's not a gap, that's not a gap, that's not a gap. And we literally closed below 50% of that range between this level. And you would think, man, look, you're closing below, consequent encroachment of a gap. You're invalidating it, right? Nope. Valid, completely valid. Completely valid. And then now we moved up and payal. hmm But this is what I was waiting for. I was just waiting to exit this consolidation range. I just really wanted to see what was going to happen. And I was incorrect, and the levels that I chose were incorrect. Um, and it is what it is. It is that exactly. Once we left this inversion, and we'll call it that. And the reason that we'll call it an inversion is this. This is my qualifier for it being inversion. Once we left this inversion, the first gap that was open here, you could have traded this gap with your stop loss right here and been completely safe, right? So the first imbalance after the inversion, perfect, perfect little, perfectly entry, perfect little doopsie doodle. We hung around to look forward to see it. Hanging around, looking forward to seeing it and tracking it, charting it. All of those sorts of things are really, really good. Um, but I am not I don't like a tie. I don't like I don't like breaking even. I don't like losing. I don't, I don't just, I don't like struggling with a market that visually is designed to create the feeling of visually is designed as you're watching the candles. I believe it is. It's designed to hypnotize you. You heard it here 500 times. I'm sure plenty of other people say the same thing, and if they haven't, then they really should say it. This is look to me. It seems like it's literally have these little programming elements in it that the price goes back and forth, not for any sort of true fair value or true market value or anything, but it really is designed to um stimulate you, stimulate your eyes to say, okay, up and then down and then up and then down and then up and then down and then up and then down, right? It reminds me of the guy who used to hold the watch, right? You're getting sleepy, right? You're getting sleepy. Watch the pendulum as it goes back and forth. To me, that's consolidation. And I'm watching this pendulum as it goes back and forth. You want to sell. You want to buy. You want to sell. You want to buy. Yeah, oh, ooh. And you're just sitting there watching it go up and down. You say, oh, here now. Here, no, here now, no. No, no, here now, no. No, no, here, yes, here now. Here. And then once you begin to doubt yourself, then it's like exiting the building, right? It's sneaking out the back door. Keep looking that way. Keep looking that way. Here? No, don't think that's stupid. Then it breaks above this imbalance, taps it one last time, creates a small fair value gap, trades to that fair value gap once, trade to it twice, and then while you've been lulled into complacency, it just moves on about it, just moves up and away. Now, on the NASDAQ, it seems as if we've broken out, taken out the old high, and we created this sort of a movement to the upside. But it says, no, this is manipulation. Is it? I don't know. You have to trade your own chart. Look, I'm saying these things out loud, but look, you have to be careful. You have to trade your own chart. Make up your own mind, make up your own decisions. Okay. Anything done in a simulated fashion is for educational and entertainment purposes only. They're not meant to be individualized financial advice. So there you go. The London session, sorry, the ES as it breaks out of this, it wasn't really in a consolidation. It was in sort of this steady breakdown. Then it breaks back to the upside, takes these highs out, and then it does this. And then it does this. One thing that I did not do and haven't done in this particular moment is tracked exactly where we ran to with this level because we could have just broken out of this. We are on that overall higher time frame imbalance, volume imbalance that we were looking at yesterday. We have broken above the consequent encroachment of that level. And we did not do that yesterday in yesterday's market for a while. We kind of heard it over and over. And I'm not sure what it is. There's insufficient space for continued recording. Okay. All right, then we'll just keep streaming. Yep, it seems like we ran out of space on the hard drive. I'm not gonna look. I'm not tripping, am I? Normally, when we have a consolidation, there is a manipulation of prior to distribution. Where's the manipulation? This leg that's literally going in the direction that we should be going. This leg, as we've dropped back down into the order block, price to it, hit this down close candle, and then trade away. Who knows? Who knows, my friends? It is what it is. It looks like we're running for new highs. I just need to take a brief step back and take a look at the higher time frame price action just to see if there's any area that I had been targeting that I wanted to make sure those are those relative equal highs that we established that I wanted to see run. Um, since they were formed, this is what I was looking for yesterday for us to take these highs out. And then here's the higher time frame. Not higher time frame. Here's a 15-minute busy CB combo that I was looking for us to interact with. Oh, mm-mm, mm-mm, ba-bam, ba-ba. So I mean, what could we do? What could we do? What could we see and what could we do? We're at yesterday's London session high. The consolidation that we just interacted with was today's Asian session consequent encroachment. So we struggled to get through the Asian session level. We popped out of the Asian session high, turned over, moved higher. Mm, mhm. PM session high. Here is yesterday's lunch rate high. We're just taking lunch rate high. Obviously, we've taken New York session high from yesterday. Now we're at the pre-market high from the days before. If we're looking for liquidity, if we're looking for any liquidity above this high and 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 this high, should be a great deal of liquidity up here. I mean, there's like four levels, 4 or 5 ranges of liquidity in this area. We'll see. We will see. We will see at 11:06 a.m. Sorry about that. Sorry. There's still more area to go, but not breaking this range. put so many sell stops up here. It's ridiculous. I mean, as far as engineering liquidity is concerned, there is a boatload of liquidity above that level. Strangely to say, a boatload would be a sinking boat because liquidity is liquid and boats float in water. And if the density of the liquid inside the boat is greater than the density of the water that the boat is floating in, then it would sink. But if it's water inside the boat, then the boat would sink. The density of the water in the boat and the density of the water outside the boat are the same. Mm, okay, okay, okay. Which is also strange that even in the past, wooden sailing ships that they had would sink. They're made out of wood. You think that wood would float on water? Maybe they sank because they were loaded down with treasure. This isn't a historical sailing stream, so yeah, we'll get back to this trading. I was just looking to see whether or not we were going to take this liquidity out above this level. It's a great opportunity if it is taken out at this point. It's a great opportunity if it is. Well, we've been on for an hour and 46 minutes, and now we've made this move. Mm. Just taking out those highs above London. Is there enough liquidity up here to make a difference? Will we run for liquidity above this level, then collapse? Is that the game plan? Perhaps. I read consequent encroachment now of that level that I marked out yesterday as the zone that I wanted to target for entry. On the 15-minute chart, we see two straight lines. Straight lines. Straight lines. Vertically. Straight lines. Taking out the liquidity above all of those relative equal highs to the left. All of the stop losses that were placed in the area above this high, and this high, and this high, and this high. We're at the low of this imbalance above even this darkly colored range here. And there's probably another resting pool of liquidity above that level. We tapped the high of that imbalance here to very sharply, right? Very sharply, the high of where here's the consequent encroachment of it. Here's the high of it. We ran to it precisely, and we're pushing it in the last 30 seconds of that 5-minute candle. Today could be just a rocket ship day. Could be a rocket ship day. Am I on board? Nah, I blew too many trades at this point. And I'm saying that as if thinking that I'm not going to trade. And the truth is that I'm looking to see whether or not the trade that I wanted to see set up yesterday here in this area, as I wanted to trade it as a short, whether or not it's going to play out today. Just because we set up that very sharp yellow line of liquidity above this area, and then we trade into this area and we just like turn over, drop back in. It's happening extremely quickly. Yeah, one of those things, man. It's one of those things. And this range is extremely long. I think we actually are really moving quickly. It's like 16 points right there. And I don't have an entry in that level. New 5-minute candle opens, and I don't have any sort of pullback that I was wanted to see. Now, when we get to the consequent encroachment of this level, are we going to turn over, hit this, and bounce up? Mm. What are we going to do? What are we going to do? What's it going to be? Mm. Not a trade that I'm ashamed of because this is an area that I had targeted for a couple of days now. This is what I was looking for us to come into this area, tap this zone, and then break down. 15-minute candle is going to close in the next 3 minutes. 5-minute candle is closing in 3 minutes. It's the beginning of the hour? No, the beginning of the hour is way down there. Um, I entered the trade late again. I did not enter here high into the level to see us do the sort of a drop down pullback. Um, hesitated, hesitated. 2 minutes and 26 seconds. 15-minute candle just gives us a slight pull to the outside this range. And you can hear in the tone of my voice that this is not an optimistic. This is not the sound of optimism as a person is like, oh yeah, woo woo woo, payday. This is the sound of I don't know. I don't know. I don't know. I don't know what I'm thinking because I really do expect us to run that liquidity out above this level. With all the consolidation that we had earlier, for us to move up this aggressively and then immediately return to consolidation would be par for the course. I mean, it would be par for the course. It wouldn't be something that would be completely um um out of character for the market and for this particular market. Um But maybe I'm just, in the middle of a crazy move to the upside. I wasn't trying to catch the top of it, but yeah, I was just trying to, you know what I'm trying to say. I'm trying to say like if this is 50% of the range where the consolidation is, but you know what it could also be? This could be a quarter of the range, right? So as the range continues much higher, if it does, then we'd see that there would be another consolidation, almost equal distance from this one, in the same range from the beginning of the move. I was quickly stopped out. Yeah, that's it. That's it. That's it. That's it for the stream for today. You guys for stopping by. I hope you like and subscribe. I hope you found this entertaining. I hope you could bounce some of your thought process. I hope you could bounce some of your thought process off some of the things that I talked about out loud. Because, I think many of us are all going through the same things and thinking the same things. And when we hear them out loud, maybe we'll say to ourselves, yeah, that's exactly what I was thinking. And then you see what I was thinking and what I did, then you would say, oh, that's exactly why I was wrong too because that's what I was thinking. And if you weren't thinking that, you were thinking other things. Hey, drop that down in the comments. Like and subscribe, and I'll check you tomorrow. We'll be back here on the charts, 8:25 a.m. I'm great on the charts. Thank you for stopping by. Have a good one.